these talks all across the country. So hopefully, but I'm here Atlanta-based. So Consensus was the most fun one, by the way, yeah. So that was pretty cool doing the New York thing. But excited to be here, but would love to answer your questions. But I have a few slides to go through that helps kind of set the table, level set. Sometimes it helps to start with some basic questions to show you kind of where I come from and how I think about the space, especially cryptocurrency. First, starting off with the question, what is cryptocurrency? I'd like to debunk the notion that it's one thing. That's the first thing that we talk to people about. It's not just one thing. It's kind of 4 things that I've been able to group things in. I've seen people put it in 8 categories, but I like to think of it in 4 categories. The first one is an actual currency, just like a dollar. So you got players like Bitcoin Cash, one of my favorite projects, Dash, trying to replicate how currencies behave. They're doing things like minimizing transaction fees. They're doing things like trying to make payments as fast as possible. They're trying to displace what a currency is. The other one lots of people think of, a storage of value. So this is where the big players are. Bitcoin and Litecoin are 2 of the most popular ones that are trying to be something like gold. So a gold or silver alternative, which is very different than currency if you think about it. So if you think of why Bitcoin Cash and Bitcoin forked at the fundamental level, if you ask this question, one was trying to be a currency and one was trying to be a store of value. They had very different intents for the use case of their cryptocurrency. The third's not really a category, but I like to talk about Ripple as an example. So Ripple's trying to displace SWIFT. So it has a very specific function on trying to displace a network or a technology that's out there already. My favorite category, and this is has anybody seen the Kickstarter thing where you got the ice chest that has the blender, you know, that has the blender in it and the thing and the radio is in it, and you can get it on Kickstarter? That's just an ERC20 token, folks. If you don't like that analogy, you can think of it like a gift card, right? So all the ERC20 tokens, the 1,500, 2,000, whatever it is out there right now, any token sale, token offering, they pre-sold their product, right? So you paid them, they're going to send you the ice chest when they build it down in the future, or the wallet that's really clever, or in most cases, most of them pre-sold a service. So I think of those kind of like gift cards. And I kind of put this slide in there because the next question I always get is, or the first question I get is usually about the regulatory landscape. But I like to talk about those 4 categories because it makes it make a little bit more sense. Because if you have cryptocurrencies like acting as a currency, some acting as a storage of value, some as a replacement of SWIFT, Kickstarter, it makes more sense that the 4 major US organizations are really trying to struggle with trying to come up with the regulatory framework for what these things should do. So when you think of cryptocurrency as one thing, it doesn't make sense that FinCEN would think it was a currency, that the CFTC would think it was a commodity, the SEC thinks it's a security, and the IRS is property. But when you think about what cryptocurrencies are and the categories of cryptocurrencies, this starts making a little more sense. But then you understand why regulation is going to be really, really complex, right? Because not a lot of people understand that. And not a lot of people can articulate to the regulators the nuances between the cryptocurrencies to be able to understand some of these frameworks. Yes?
Yeah, why do you think regulators are trying to bucket all cryptocurrencies into this blanket description? Why don't they analyze each one and see, is it security? Is it a property? You know, Bitcoin might just be a currency.
Yeah, why are regulators doing this is the question. I think that to give the delay credit, the complexity when they get into it is what's causing that delay. So the SEC is not quite ready to say everything's a security anymore. And you had the Howey test that a lot of the utility tokens used to get out of being a security early. But they've said they think most things will be a security. It's really interesting. FinCEN scared the crap out of people. If you go back to July, I think it was July 18, that said everybody was going to jail because everybody's a money transmitter. That was a letter to Congress. That wasn't even authoritative, right? A lot of these things, there's people getting pressured at all of these organizations to come out with clarity. But just like with any cutting edge technology or new product, it's going to take a bit of time to unravel how you're supposed to appropriately deal with these things. The question I always get is in those categories, I didn't talk about it as an investment, you'll notice. So people keep asking, people all the times I get the question, is it an investment? Is it an investment? And instead of giving you some flippant answer, it feels a lot of times with the volatility like a Vegas bet. But in order to kind of move forward as opposed to is it an investment, it is definitely an asset class. And when I talk about asset classes, I think of wealth managers. And the best wealth managers in the planet are saying, if you are a highly aggressive investor, they always put you on that spectrum, like really conservative, kind of conservative, normal, whatever. I don't think anybody's normal. If you're highly aggressive, they're saying you should have less than 1% of your assets in cryptocurrency. That's a fair rule of thumb for us to have. It's a fair statement, fair rule of thumb. So if you're but you can which kind of puts it in that Vegas bet kind of scenario for most people. When you're in the space and if you're in the room, hopefully you're interested in dealing in cryptocurrency. When we talk to businesses particularly, but individuals need to understand these things as well, we talk about four things in understanding the risks of cryptocurrency. Volatility is the one that's like, duh, right? We saw it go great, like a rocket ship in 2017. Now it's a lot easier to talk about volatility because before people would say, well, it just goes up. And 2018 helped, and people understand that the volatility, it also goes down. But that's been a well-publicized one. I like the Bitcoin charts out there are kind of crazy. But in commercial settings, one of the things we're talking about with people are transaction fees. It's a huge risk if you think about building a platform. So at storage, we do in our version 2 of our product, we were doing 150,000 payments per month. And we would do them over a period of 2 to 3 days. And when you make a payment, it's an ERC20 token. We had made some assumptions about what the transaction fees would cost. And you can see in the Bitcoin network, fees got as high as $28 per transaction at one point, okay? That was in the crazy skyrocketing days, but if you're doing micropayments, $28 payments doesn't make sense. If you're sending less than $28, it doesn't make sense. If you're sending less than $100, it doesn't make sense, right? But if you think about it back to on the Bitcoin side, Bitcoin's trying to be a store of value. They're not trying to be a currency, so they theoretically could have high fees. They don't want $28 fees, but they could stomach higher fees. Kind of back to where we get to the business risk perspective. So if you're making 150,000 payments and you're expecting them to cost 2 cents a payment, and CryptoKitties happens, and payments go to 50 cents a transaction, which is what happened. CryptoKitties happened. All of a sudden, ETH transaction fees went to 50 cents, dollar. And you have to do 150,000 payments to operate your business and run your business. All of a sudden, it changes the economics of your business model. So a lot of people didn't understand that. With the project we were working on, we made up 8% of the Ethereum transactions in a 3-day span. So now we have board level conversations about Ethereum's sustainability on transaction volume, transaction fee stability, and we have backup plans now for if we have spikes at those levels, if another CryptoKitty happens, if the volume on our platform goes to 1 million users. I mean, we were in beta with 150,000 1,000 payments. You know, so we're about to go live with our core V3 product, and we have to be prepared for this huge risk of transaction fees. So we have a team of 3 people working on a contingency plan for a secondary payment mechanism outside of the Ethereum chain. And it's very theoretical because it's a huge business risk. I didn't see that one coming.
I've been looking, a lot of people say, hey, crypto's great because there's no fees and all that, which is not accurate because
there's always fees, yeah.
Somebody has to pay. And you talked about the transaction fees here. Are there any good studies that show like what the actual transaction fees are on average compared to what Visa's doing? Because that's the economic reality of whether or not the market's going to adopt it. And then there's the whole conversion from fiat to crypto to fiat, where you're going to pay on Coinbase 270 bips round trip in addition, and so it isn't even close to free.
Right. So there's not any studies that I've seen on it. Anecdotally, we use 2.5% as the acceptable level of fees based on what the credit card companies have done at scale. So we think that'll be the top end of what will ever be allowable on a chain, because consumers have set that at 2.5% on the transaction fee side. You've got some of the platforms really pushing to go heavy lower, and those are the ones doing lots of transactions. Think of Ripple, think of Bitcoin Cash, think of Dash. They're trying to really get lots lower on a percentage basis. So it's fascinating talking to those projects. I'm kind of a fanboy. I'm not related to the Dash folks, but I'm a fanboy of them. So at Consensus, I got to meet the founding team and talk about them because I like all the governance stuff they're working on. So I get to talk to the CFO there like quarterly. We just kind of chit chat about what's going on, and we kind of keep track of that. But their reality is much different than a token project reality, because they're trying to displace the payment mechanism. This one is also not very logical to some people. It's logical to most people that have been in the space a while. So liquidity risk is a huge risk. I talk about liquidity risk in kind of 3 main buckets. The first bucket's is just fiat over here, or US dollars. The third bucket doesn't get a spot on my slide because I don't like it. So you have the first bucket, which is like the Bitcoin and Ethereum. Anybody on a major exchange you can get straight to cash has a different liquidity risk than somebody that doesn't. The gentleman right here is a wealth manager. He was talking about it's costing 250 basis points to get from one of these other currencies to these currencies and then out to cash. So it's just an economic reality on liquidity risk, and that has nothing to do with are there enough supply at that value, even at the spot price, to be able to get it to liquidity. But you need to think of things in buckets, or it helps me to think of them in buckets. So Bitcoin and Ethereum are in that core bucket. You have to use a Gemini or Coinbase or something like that to get it to US dollars. Then you have another bucket with, let's call it now, used to be 150, it's probably up to 200, 250 cryptocurrencies in the next bucket, which is like the almost liquid bucket. So you use a Binance or somebody like that. You go from Binance, you can exchange like storage, which is one of the tokens that I was telling you about. Storage to Bitcoin, Bitcoin to US dollars, so it's a 2-step process. And then you have about 1,500 cryptocurrencies that I call off the page, that if you're in those, like it's very difficult to get liquidity on. You have to go find some obscure exchange that may trade them, but the core exchanges aren't trading them. So I have my clients who are accepting cryptocurrencies or having to get cryptocurrencies to cash. I'm helping them design their cryptocurrency acceptance policies around which exchanges they use. So for example, my company accepts cryptocurrency, and our corporate account is at Binance, so you can pay us in anything accepted at Binance. And that's the corporate policy. If it's not on Binance, I mean, we would have to set something up. If we found somebody that wanted to pay us in something else, we might go set up an account, but right now, the corporate policy is whatever's at Binance. So that's what I'm advising people to do, to really understand and have these things set up to really understand liquidity. And it does help to start small. When people are starting out, BitPay is the #1 recommendation I have for people. So all of the small businesses I work with about 400 small businesses. That one of the things that everybody wants to do is collect money, right? Make it easier for customers to pay. Well, BitPay, a great Atlanta company, is great at that because they allow you to accept Bitcoin without taking these 4 risks that we're talking about. Because your customers can pay in Bitcoin, and you can elect to get US dollars. You have to pay all the hidden transaction fees. You make money, I know. But it's a great service, and it's the best way that I encourage our customers into getting into this in the first place that aren't really heavy cryptocurrency companies. The landscape is changing. I showed you there's really 4 or 5 of them in that fully liquid bucket. On December 7th, the landscape kind of was foreshadowed that there would be a change. Coinbase kind of can move the market a little bit. These are the 30 projects that Coinbase is looking at listing to take directly to cash or US dollars. So Coinbase is in this process with these 30 companies. And this is a real process. I've gotten, if you'll notice, storage is on that list. So I'm actually intimately familiar with some of the process. But what's here is the public information. That's what I can kind of share right now. But this is a little bit of a game changer on the liquidity side for people. We could go from 5 to kind of 35 kind of cryptocurrencies that I feel are more credentialed. And it's kind of been a privilege to even be part of this group of companies and going through this process, because this is a group of companies, the ones that make it through this process are the ones doing it right now. And that's how we've seen a lot of the Binance be kind of the first filter, Coinbase be the second filter on credentializing projects. But look at this news. If this ends up happening for an Atlanta company, this would be phenomenal, right?
So these coins aren't guaranteed. They're just working with they're talking.
On December 7th, Coinbase announced that these are the 30 cryptocurrencies they're looking at adding to their platform to take directly to fiat. And it's been a rather extensive, exhaustive process on going through that process with people. So, we don't know what Coinbase is going to do. I can honestly tell you that. But it's a really cool process. It would be great for Atlanta to have a representative in that bucket, right? Did you have a question?
Yeah, but it's kind of weird. So do you think that this it's very speculative. Do you think that this would affect the correlation of this thing with Bitcoin, for example?
I don't understand the question. Would it affect their correlation with Bitcoin? Would it affect their value? Well, anytime you change the liquidity of something, you affect the value. So the people I talk to about the value of cryptocurrencies, like one of the advisors for one of the projects we work with is an advisor to the Fed in Atlanta. And what he talks about, the cryptocurrency's value right now, each of the currencies, it's going to change like what's causing the value designation. Right now, speculators are really heavy into most of the cryptocurrencies, and lots of the projects, especially on the token side. I've talked most to the guy about the tokens, not like Bitcoin and ETH and stuff like that. But specifically from the token perspective, until the project has accelerated, like is more mature, and people are using the token for its intended use more, the value really won't settle out. So it's really interesting. As we asked him, should we buy it back? Should we set a collar around it? And he's like, it doesn't matter. Until the project is up and running and really clicking along and people are using the token for that, the speculators are going to drive everything. It's really almost a nonsense value. There's some interesting papers on it on the storage website. The economist's name is Warren Weber. He's not a storage employee. He's an advisor for the Fed. He wrote a bunch of information on that if you geek out on economics and stuff. The fourth one is the biggest one. If you're an individual, you should pay attention to. And I've been preaching this for a long time. When you put things on an exchange, you no longer have your private key. So so the saying we have is if you don't have your key, it's not your coins. So you're like giving your money to somebody to hold for you, okay? They can do with it whatever they want. They're not keeping it in whatever address you send it to. If you track the address that they send it to, you send it to it, they send it out, they send it to a pooled address, it's there. They can do whatever they want. There's no regulations, no rules. They can do whatever they want with that. Unfortunately, last week, a lot of people found out about this in the Canadian exchange. Reportedly, a 30-year-old CEO who is the only one to a $130 million private key, like the private key for his computer, died suddenly. So anybody in this Canadian exchange cannot access their coins. They're not registered. Their coins are not registered to them because they do not possess the private key. The person that possesses the private key, nobody has the password now. Okay? So when we're thinking about risks, this is the most underreported risk until last week that I've been talking about for the last year and a half. So all of our clients, we have them use exchanges to exchange. So you only keep stuff in exchanges. They're not FDIC insured. There are very few products. There's some beta products coming out that will allow you to keep custody if you have over $10 million in cryptocurrency, but most of us are like just normal people, right? That's not FDIC insured like a bank, but people are using it like a bank. But if this stuff happens, they're gone. There's no recourse. There's no way for that company to make those people whole. So it's kind of crazy, but this one was the most underreported until last week. And most of the people don't remember Mt. Gox. Like those of you that have been in the space a while remember some of the other exchanges that have gone down over the years. So we're going to talk about a little bit about accounting for cryptocurrency, and if you already have it, so I just wanted to table set a little bit some of those things and some of those lessons learned. I like to meet the founding teams whenever I use a cryptocurrency tool. So I've dealt with the legible folks at Verity. Libra, if you're a hedge fund, Libra is a great tool. They do a great job interacting with exchanges. If you're more like our clients and you're keeping stuff offline, then Legible is a much better tool. If you're an individual, CoinTracker I've talked to their founding team. They're putting more and more in it. They didn't think it was going to be this big. There's another one called cointracking.info that I know a lot of people have heard, but it's not on my slide because I haven't talked to their founding team. So I do more on the business side of the house. I've talked to some of the other people because so many people have asked me about what should I do with my stuff. So for tax, Liquidity already did it justice. So there's kind of 4 things words people need to know. If you're dealing with cryptocurrency at all, you're going to have to report your transactions on what they call an 8949, which is like, I did some cryptocurrency transactions. This is how much gross I sold. This is how much gross I received. And this is the net gain or loss for the year. And you got to pay your short-term or long-term capital gains on that. Yuri.
For a while, we were being advised to record every single transaction, every single trade.
Yeah, every single, that's why we're using the software tools for people. So you can report it kind of in a blob on Form 8949. If you get audited, you're going to have the details that back up what you put on there. It's just like if you're a day trader of stocks and you made a bunch of transactions, you got to report what you did. The weird thing about cryptocurrency that's different than day trading, that's throwing a lot of people off, if you go crypto to crypto, it's like you went to fiat. So you have to report it like you sold it and you bought it, the other one. It's kind of a weird deal. But it can get you upside down at your end, especially if you have a cutoff like we did. So a lot of people, if they sold a bunch or they did a bunch of crypto to crypto trades at the end of 2017, they had huge gains. And they won't have losses in 2018, and those might be limited to be able to recover those gains. That's going to require a better tax person than I've. There's smart tax people out there. You should talk to them about that kind of stuff. There's definitely no like-kind exchange. We talked about that earlier in Jacrity's session. And then we've heard that Coinbase is sending 1099Ks out to people. So if you under the money transmitter rule, They're catching people if you did gross amount over $20,000 worth of trades, gross. That doesn't mean you have to cash out $20,000. You're getting a 1099K. So if you got a 1099K and you're thinking about not doing this, you're crazy, because that'll be an audit red flag. You'll be in the 1%. I don't know if you can see this in the back. I put some of the tool information up here for some of the slides. I didn't know how big the screens were going to be, but a lot of people like to see the tools and think about what they look like and what they do. So this is one for individuals called Coin Tracker. It allows you to go in, pick whichever. They have about 15 exchanges you can pick from. If you use one of those, it'll pull all the transactions in. It'll give you a nice dashboard view. You can see in one place all your cryptocurrency. And then it's free. The nice thing about consumer tools, you got the freemium product, right? Until you get to this point and you want to generate the reports for your tax returns. So it's genius, right? But you have to worry about on Coin Tracker and Coin Tracking Info both. It's kind of garbage in, garbage out on the front end, because a lot of them are catching you partway through, and they don't have your information for how much cash you put in initially. So you've got to be wary of that. And it takes a little diligence to get it set up, but once it's up, it's actually pretty good. And this is the consumer tool that we talk about. On the business side, on just doing the accounting, I mean, do we have any accountants in the room, or can I fly through this? Oh, accountant, I'll do this for you. So we're setting up a chart of account on the balance sheet for each of the cryptos for most of our clients, just blobs as cryptos. On the income statement side, we're doing single line items, one for crypto exchange and expenses, and one for gains and loss. The only difference is if they are going to use it for meals or entertainment or something like that, we're going to need to put it somewhere else because that's not deductible. But most of them aren't doing that. So we're able to capture it in a single line item. A couple of them that are really advanced are doing 1 or 2 line items because they have operational significance. So like farmer payment or node operators now at storage will have their own line item because the business wants to see those. So that's the exciting accounting stuff, folks. This is our lives. Like we're like hanging out, like we're geeking out about this. It's pretty fun. So basically, Legible, this is one of the other tools. This is what their interface looks like. So the on-chain stuff is phenomenal there. So you're able to put in your XPub key if you're a Bitcoin user or your Ethereum. The nice thing about the Ethereum interface is it picks up Ethereum and all the ERC20 tokens. And if you ask why that's significant, they have the exchange interface too. One of my clients, they put in their Ethereum address, and Jagruti was talking about airdrops earlier. Does anybody know what an airdrop is? It's like a free token. And you're like, oh, that's worthless, and most of them are like 7 cents and 6 cents. Well, in this dashboard view, it showed our client everything that was in all their wallets. They had $70,000 of OMG. Anybody remember OMG? It's like one of the only airdrops that's like made any money. So they sold it and added a dev. It was like, oh, we get a new developer. So some of these tools have had really cool impacts on people and clients. This one actually allows you to do contact names. So for my commercial clients, if their law firm is taking it, this is where I put the law firm name in, and I link it to the address. So when I pull it into their accounting system, I can see what they paid. And there is the creator of Legible right there in the back. So this is where they have an interface where you can export the transactions. You can export the transactions from on-chain stuff and exchange separately. And there's an old tool. Now they have a direct OFX file import for QuickBooks. And soon, hopefully Xero and QuickBooks are both in talks with them, as is NetSuite, on getting into their app stores. Very exciting stuff for the accounting world. Then there's big choices on what we do in accounting. We geek out about, do we bring it in US dollars, or do we actually leave the actual currency itself in there? I say USD, but that's me. What do I know? And then some people want to book the fair market value, so we book in reverse, so we market to market every time. I've found keeping it in the ledger at the cost basis really helps down the down the road when people were selling. So that's all I had prepared. We've done a lot of cool stuff at storage. We've got some of the developers in the back that have been manning the table and doing fun stuff. Happy to talk to you about any of those things, the kind of the compliance landscape, whatever you guys have questions about. Been fortunate enough to have lots of kind of crazy operational experiences and all that fun stuff. Yes, sir.
So you mentioned about the account side, but so for individuals, the cryptos are considered capital gains or loss.
It's just like you bought a stock. It's like you're buying and selling stock. It's called property in IRS terms.
Right, and what if the business is doing transactions with Bitcoin and you're incurring those gains and losses all the year, and where does that go?
The question is, if a business is paying expenses in cryptocurrency, what happens? Well, at the time on which they send the Bitcoin out, they have an expense for that amount, and then they relieve whatever the value was that Bitcoin was on their balance sheet. And if there's any difference, it's a cryptocurrency exchange gain or loss. So if you had cryptocurrency that say you had a Bitcoin, I'll use Storage for example. Storage did their ICO in May, so their Bitcoin's at 2,200. So today, if they paid one Bitcoin for expenses, that would be $3,400 expense. They have it on their books at 2,200, so they would have an expense for $3,400, which is Bitcoin's price today. They would have taken off their assets. They would have a $2,200 asset leave, and then they would have to book a $1,200 gain. So they have an expense for $3,400 and a gain for $1,200, and they're both characterized differently depending on if you have Deloitte and Touche as your accountants. And I can tell you about that later next week when I get the final memo from Deloitte on what that is.
What's the accounting tax implications of stablecoins? So, like, let's say an end user goes from fiat to stablecoin to fiat.
Fiat to stablecoin to fiat, you have a gain and loss on every transaction. If it's at 97 cents, if it's at $1, it doesn't matter. But if it's at 98 cents, 97 cents, whatever it is on the stablecoin, you have the same problem. You have to report it like you bought a stock, sold a stock for $1, and no gain, no loss.
So are you subject to capital gains tax?
Yeah, it's cap gains and losses. So short-term or long-term, depending on how long you hold it. Exciting stuff. So, the stablecoin. Yes, sir.
Yeah, so with these like legible or these tracking tools, can you like run down how exactly it works? Like I bought a lot of coins near like the ATMs, like Bitcoin Depot, and find some on Coinbase and it's all over the place. So do I just give them an address and they find like an Ethereum address and find all that other address?
Sure. He's asking how the tools work. So there's on-chain and then there's exchanges that have two totally different characters. So on-chain, Legible, for example, is running 6 chain nodes. They're running Dash, they're running Litecoin, they're running Bitcoin Cash, Bitcoin Gold, Bitcoin, and Ethereum. So those are the 6 chains. So if it's on one of those 6 chains, even if it's an ERC20 token, that'll pick that up. If you put the address in, they're running full nodes. So those are all public blockchains. So they'll pull all the transactions forever for those addresses. So they'll have a complete accounting for that. That's why I like on-chain, because there's a clear custody record. If it was in an ATM or a exchange or some off-chain, if you're an exchange, if somebody else is holding your coins, you don't have the private key, they're dependent on the data they get fed. So like Bittrex and Binance might have better APIs to get that data for them. Some might only go back 3 months. Some might not let them have deposit info or withdrawal. So you're kind of at the mercy of the exchange. I think Legible has about 15 exchanges supported right now that have varying degree of API interfaces, but it's just asking the exchanges what they say they did, right? It's not blockchain data. On-chain, you get the actual blockchain data. That's why the counterparty risk I talk about so much is because exchanges, if you really watched when you sent your coins to an exchange, what happened to them, you'd lose them really fast. It goes from boom to a pool. Now it's commingled with a bunch of stuff. God knows what's happening. Are they keeping it enough to get your money back? Who knows? It's kind of crazy.
You know, I think years ago, like, you know, if I had Bitcoin, I bought Ethereum, and I bought storage or something, does it only track that one Bitcoin or?
No, it tracks everything if it's on chain. So as long as you have your address in, you'll do that. And the exchanges track everything. Now, the reporting in the exchanges is of varying degrees of sophistication. All of the exchanges are realizing if they're dealing with customers in the United States, they have to up their reporting game a little bit. So some of the exchanges are starting to catch up on their reporting. But it's really complicated if you have anything before, last week, that you haven't been tracking. Now, as soon as you get it on one of the tools, if you're in one of the, like if you get it on Legible and then you stay with the exchanges and the chains that they're on, you have a much better chance of understanding what's going on with your portfolio. The CEOs of the companies that I work with about 15 projects total. I personally am involved with storage and Verity, but my company works with about 15 projects. The CEOs are in the Legible dashboard daily or weekly, just like they would be in their bank account, because it's the only place they can see the full picture of their cryptocurrency holdings. It's really helpful for my clients, is what I'm saying. I don't even get commission for that. I need to work on that. Can I have commission, Kel? So. No, it's easy. Is there any other questions? Cool. I'm going to hang out. If you have some questions you don't want to ask, I'll hang out for a little bit. But I think after this, we're all going to the fun, the keynotes. But stop by the storage table because Ferris and Jennifer here, they're phenomenal. They can tell you all about what's going on with the storage project. And I'm sure there's a bunch of other things out here that you guys find interesting. But thank you very much.